So as I was talking about our YBS initiative, that stands for Young Beginning and Small Farmers, that we put a lot of emphasis on how do we get farmers, how do we get people back into farming? It seems like there's a lot of people leaving agriculture, and there's a lot of people that think that agriculture is just becoming bigger. And in order to stay in agriculture, you have to either, you know, get to thousands and thousands of acres or specialize in some form or another. And we're just trying to help facilitate any way we can to help get this next generation into agriculture. So anyway, let's jump right in. I'll talk a little bit about Western AgCredit and the farm credit system. So the farm credit system was set up by Congress in 1916 as a result of just farmers needing a stable source of financing. Western AgCredit is one of those associations. We are chartered in Utah. We have all of Utah, a little bit of Wyoming, some of Arizona, and then a little piece of Nevada. There are also other farm credit associations throughout the nation, so that the whole U.S. Has access to farm credit funding. Our goal is to basically provide sustainable lending for agriculture, and it's not just limited to lending, and I'll talk a little bit about that as we go on. But that is our primary objective, is to make sure that the producers have a stable source of funding. As you probably all know, agriculture is very cyclical. There are times of really high good prices for your commodities that you're selling, and there are times when they're not so good. And so we're here to kind of help bridge the gap between the good times and the bad times and everything. So I just put this up here. What does a typical loan at Western AgCredit look like? We can essentially fund anything related to agriculture. We do real estate loans, any type of farm building, dairy barns, hay sheds, greenhouses, you name it. If it's used in agriculture, we probably funded it. Hog facilities, turkey barns, mink sheds. And then we do livestock loans, equipment loans, and then we also provide funding for operating funds. So Western AgCredit, we are ag focused, right? Like that's all we do. We don't do any loans that are non-ag. And so we are genuinely committed to our rural communities and our ag producers, because if we do not have agriculture, then our business goes away, right? That's our bread and butter. That's all we do. So to help show the community our commitment, we do offer some grants and scholarships, several student programs, which I'll get to here in just a minute. But we just really want to feel like we're part of the community and helping rural America grow and develop and stay focused on our. So we do offer several grants that I'm going to talk about here. First one here is the Community Partnership Grant. What our Community Partnership Grant is we actually have funds that are contributed by our board of directors as well as our employees. And then our association matches those funds. And so if there's a community project that's happening, whoever's in charge of that project can hop on our website and apply for that grant. And then we as employees actually vote on those applications, because there are dollars that we're donating to them. And so any project can really be considered for that. They're organized by the community, nonprofits, schools, service organizations, anything like that. So if you have any interest in that or know of anybody that's looking for a grant that would qualify for, westernagcredit.com, it will have our grant links to the applications and everything there. Also, we have a Farm Fresh advertising grant. What this is it's really to help farmers markets publicize their market. So annually, we give 4 $500 grants, and we award those specifically to farmers markets. And then they'll also be given 200 reusable shopping bags to distribute at their market. So again, that application is on our website. So if you have interest, if you know of anybody in charge of a farmer's market, then we would encourage you guys to go look at that. And then we do offer some scholarships. Okay. So we do offer several scholarships, both to borrowers' children or borrowers, but also to non-borrowers that are going into agriculture. We've got 5 $2,000 customer scholarship. We have a $2,500 Daniel Anderson Memorial Scholarship. Daniel Anderson was one of our board members who passed away a few years ago. Then in addition to our customer scholarships, we do have 2 $2,500 scholarships that members of the Utah FFA Association, of the Utah FFA Association, one of which is in partnership with IFA. So candidates can access these applications through their local FFA chapters. And then if they're interviewed by a Western AgCredit staff member during the annual state FFA convention. So that recipient is announced during the annual FFA convention. $3,000 scholarships to students studying agriculture or ag business at Utah State. And then we've got $3,000 scholarships, 3 $1,000 scholarships to students studying agriculture at SUU, and then 2 $1,000 scholarships to students studying agriculture or ag business at the University of Wyoming. We just really want to make sure we're giving back and promoting agriculture. All we do. We do have lots of FFA support. We've helped send some FFA kids to the national convention and all sorts of things like that. So, next, I wanted to take some time and talk about some tips on preparing your business for borrowing money. Maybe some of you are already in this process and already have loans with maybe Farm Credit, maybe other commercial banks or family members, other lenders. But this applies to any kind of borrowing. So just a few, 6, 7 points here that I wanted to touch on that I really feel is important and really the foundation for borrowing money. Number one is really just know your capacity for debt coverage. You got to know what your income is and what your expenses are and what's left over. How much of that's going to be used for personal use, family living expenses. How much is truly left over to service debt. If you don't know your capacity, then it's pretty tough to know how much money you want to ask for, right? Second one, maintain strong liquidity. If you don't know what liquidity is, what it is it's basically all assets that are cash or equivalent to cash. Something's going to be turned into cash within maybe 6 to 12 months. And then current assets minus your current liabilities, whatever's left over there is your liquidity. You've all heard the saying, cash is king, and that is so true, especially in agriculture where it is so cyclical. There are times where maybe the business loses money for a period of time and you'll need to rely on that cash to make payments. So just when you're approaching a lender or somebody that you're going to borrow money from, just make sure you've got that liquidity there to say, look, if things don't work out for a few months, then we can absorb that with our. The next one, understand your leverage, which basically is your debt to asset ratio or your debt to equity ratio. Total debt, compare that with your total assets. A lot of people don't realize how important this is. We actually rely really heavily on this ratio, on the debt to equity ratio, mostly because in agriculture, there are usually times where cash flow is not very good. There are times where cash flow is excellent. And with those swings, oftentimes there comes a need to either refinance debt, lean into other assets to maybe restructure. And so understanding your leverage helps you know what kind of a backup plan you have. It also lets you know how much of your business you own. How much does the bank own? How much do you own? And our goal as a lender is not, we don't want to own your operation, right? We want to partner with you so that you can take it to the next level and then eventually either pay us off and leave us completely, or we grow together at a reasonable pace where everybody benefits. And like I mentioned before, Farm Credit's been around for over 100 years now, and we've had a lot of good experiences, but we've had a lot of really bad experiences. You talk to anybody that worked for Farm Credit between 1980 and about 1993, and they will tell you that the Farm Credit system did not have a very good reputation at the time. We learned our lessons the hard way of lending too much money, kind of like the housing crisis in 08, 09. Farm Credit experienced something very similar 30, 40 years ago. And so with that experience, we've kind of tailored our lending standards to help be responsible with our lending and help those individuals who are borrowing know what is a reasonable amount to borrow compared to their total assets. The next one, what is your plan for collateral with the loan? As you expect, lenders will require at least some sort of collateral. At Western AgCredit here, we can take real estate as collateral, cattle, feed, equipment, farm products, really about anything that you're purchasing, we could secure as collateral. We can even take certain investment accounts, accounts receivables, things like that. So when you go to apply for a loan or you're discussing a plan with a lender, just kind of know they're going to ask for that. So be prepared to discuss that with them. And then, what do you bring to the party? We're a lender. We don't just give out money and say good luck. We really want to be that trusted advisor, that individual that helps you advance to the next level. And in order to do that, we've got to have a very successful partnership. We're not just going to lend money to anybody. We want to make sure that we're going to be constructive with our financing, as I mentioned before, to lend out funds that are really going to be beneficial for the borrower. And then this last one here, I put down know your sleep number, and I say that kind of jokingly because really what it is what number keeps you up at night. If you borrow, is it 500,000 or is it 50,000? If you owe the bank $100,000, are you going to be able to sleep at night? And so know what that number is. Maybe it's a cash flow number. Maybe it's a monthly payment or an annual payment. But just know what you're comfortable with. And whatever that number is, dial it back, 10, 15%, just in case. All right, I don't see any questions on the chat yet, so I won't answer any questions. The next part I wanted to talk about, it will change for me. Oh, it is not showing me. Oh, Scott. There we go. All right, I wanted to talk about our Young Beginning Small Farmer program. As I mentioned before, Farm Credit is really focused on helping the next generation or the next, and whether that next generation is a father-son, mother-daughter duo, or if it's somebody getting into agriculture for the first time. It could be the first generation, right? Our goal is to help facilitate that process as smoothly and as easily as possible. And so we've created a mission statement, and I wanted to put it up here just so everybody knew what our purpose is with our Beginning Farmer program. And it's to connect young, beginning, and small producers with industry resources and constructive credit to achieve a sustainable future. And we spent, I don't know, several hours trying to develop this mission statement because we really wanted to make a statement to the public on how committed we were to making sure young beginning small producers have as much opportunity as somebody that's been in the business for many years and regardless of their size. And so I underlined connect here because I wanted to focus on making sure everybody knew that if you came to us for a loan and it didn't work out, we want to make sure that we are connecting you with people or resources that are a better option than maybe we could have been for. Sometimes we realize that, maybe our end game is not to write a loan to the applicant. Maybe it's to connect them with a grant. Maybe it's to connect them with the farm service agency. We just really want to make sure that we're facilitating the best possible scenario for any applicant that comes and meets with us. And every one of our loan officers has been trained. We do have what's called our AgExpress division that specifically focuses on our beginning and small producers. But any one of our loan officers can talk through this program with any applicant in any one of our branches. So if you know somebody in one of our branches and you have any questions, drop in, visit with them for a few minutes, and we can give you all sorts of information. Our YBS program, we call it our Ag Future program. And we have 4 pillars that we focused on when we developed this program. One was education, one was resources, YBS outreach, and then, of course, our loan programs. I'm going to spend just a few minutes talking about each one of these because I feel like it's helpful for everybody to know what we offer. Some of these are new enough that we haven't implemented them 100% yet. We're maybe 60, 70% there, but still wanted to let you know what was coming down the pipe in the near future. So education, we seek to provide meaningful educational opportunities to young beginning small producers. And like I said before, our end goal is not always to write a loan. Sometimes it is to help educate the next generation for several years before they're even ready to apply for a loan. Maybe these are the next generation that eventually wants to take over the family farm or whatever it may be. We want to help facilitate educational opportunities so that everybody's got a chance to accomplish their goals. And we want to be there for that. So these 3 bullet points down here. Number 1, develop content offerings to add value to borrowers to enhance lending relationships. Support, encourage, and promote industry and financial education through sponsorship, content, and promotion of outside events. Facilitate borrower education, sponsorship, support to increase their learning and development. Talk a little bit about our education sponsorship there. We do have a couple other programs that I'm going to dive into here in a little bit that I think you'll find helpful. We did talk a little bit about scholarships already, so I'm not going to spend too much time on this slide. Just wanted to kind of reemphasize that is part of our YBS program. We do want to help these young people get into agriculture. There's fewer and fewer people declaring agriculture as their major, and we want to just give every opportunity to those that want to stay in agriculture that opportunity. We also, so the second bullet point here, we do partner with other system institutions. AgWest Farm Credit is one of our partners with our Farm Credit Fellows program, which I will talk about shortly. But then we're continually seeking opportunities. So if you have any other recommendations for us, we'd love to hear your thoughts. Any way we could support young, beginning, or small producers, we are all ears. All right, the next pillar, our resources. We seek to facilitate access to industry resources and partnerships supporting YBS producers. So these 3 bullet points here, consolidate and inform producers on outside resources available, provide mentorships to YBS producers, form alliances with other industry leaders to facilitate delivery of services to YBS producers. We do have a lot of resources out there. We're statewide with a nationwide reach, and we just want to make sure that we are connecting those individuals to the resources they need, either borrow money, create a business plan, or help progress their business to the next level. Here's a couple of bullet points that kind of highlight that. FSA is one of our one of our top partners, right? We partner with FSA in a lot of things, which we have a whole loan program section that I'll talk extensively about FSA. And I do believe there are several FSA presenters later today that will probably dive deeper into that. But FSA is a resource that we rely on heavily. They've been a great partner with us on a lot of loans, a lot of projects. We really want to connect our young farmers and our small farmers to all the industry resources that maybe some of those larger operations have connections with. Crop schools, industry events, you name it, anything out there, we want to make sure that they're aware of them, just help provide that opportunity. We are developing a mentorship program coming later this year. It's really to help the YBS farmer to learn about lending, borrowing, managing risk. Not a whole lot of production experience because we're lenders, but we do want to help them really just find ways to manage their business and manage the risk at the same time without being too, what's the word I'm looking for? We don't want to step on anybody's toes, but we want to help be there for them to answer questions and help them with any type of question they may have. So in most cases, these customers will be assigned to their loan officer who's managing their account. However, we are looking at potentially expanding this to individuals that may not be borrowers or are not borrowers yet, or may never be borrowers, but still have that ability to form that mentorship, that relationship to help them grow as an individual to potentially be an ag producer or an ag manager someday. These individuals will have regular contact with their mentors based on their interests through personal meetings, farm visits, emails, texts, and invites to Western AgCredit events. So more to come on that. It's not quite up on our website yet, but in the next few months it will be. If you have interest in that, we'd definitely love to chat with you. The third pillar here is our outreach. We seek to benefit YBS producers and the agriculture community in general. This goes back to our education a little bit, scholarships, financial support for youth ag programs. We definitely want to support the development of non-traditional marketing outlets. If somebody has an idea that may be unique and it might be hard to start up a business because of marketing challenges, support in those ways, whether it's a branded product or social media, you name it. We want to be in there to help us succeed. We want to develop leadership in agriculture. That is the future of agriculture, right? Is when we develop our young people to be leaders. And then we do extensive advocacy for agriculture. We've got what's called fly-in, where we fly some of our board members back to Washington, D.C. and really advocate for agriculture, any ag policies, the farm bill, anything that promotes agriculture. We're very involved with. Here's a little chart of all the things that we do. I did want to touch on this one here on the right, Farm Credit Fellows. What that is we've partnered with AgWest Farm Credit it's another farm credit system that borders us, and we've partnered with them as well as Utah State University and BYU Idaho, where it's an actual class where we have, I don't know, 12 to 15 or so students that will apply and be accepted into this class. And then we'll teach them for a semester about the farm credit system. They do get college credit for it. And it's been very helpful for a lot of our students. Some of them that have gone back to the family farm have really benefited from these classes. We've actually hired some of these individuals that have taken the class. It's been a really good experience, and it's relatively new. I think we started it, I don't know, 5-7 years ago. And so if any of you are in college or have kids in college, definitely look into the Farm Credit program. It's pretty neat. Yeah, that's about it on that. Loan programs. So this is the last pillar of our beginning farmer initiative. So this is probably the most extensive part. Obviously, we're a lending institution. Our goal here is to provide constructive credit at a reasonable cost to the association, to meet the special needs of YBS borrowers or producers, not necessarily, well, I guess in this case it would be a borrower. So these are the four loan programs we offer to beginning young beginning and small producers. We have the Ag Future Microloan, we have the Ag Future FSA Partnership Loan, we have just the standard Ag Future Loan, and then we also have what's called our Ag Future Rate Smart product. It's an interest rate program that allows a discounted interest rate. So I will talk about each one of these here in the next couple of slides. So the Ag Future Microloan. So this provides financing to small farming operations in the early stages of development. These operations often include operations that market or plan to market their agricultural products directly to consumers or through local or regional food systems. Also, veterans who are entering into the agriculture industry with limited financial resources. Just really wanted to make sure we had opportunities for the underserved dynamic that they just had all the opportunity possible to get started in agriculture. So some highlights about this program here. We can fund up to $50,000 per loan action. We offer all the same products through this program that we would through any other traditional loan. That's operating loans, which would be a revolving line of credit. Term loans, we can go up to 7 years, and real estate loans, we can go up to 20 years. Typically on traditional loans, just for your reference, term loans, we could potentially go up to 10 years, and real estate loans, we can go up to 30. So it's a little bit shorter term, but still providing that financing on all those items. This is where it gets fun. In certain circumstances, we can fund up to 100% of the loan of the purchase price of, say they're buying a piece of equipment. We could potentially fund that whole purchase without a down payment required. That's pretty atypical for a traditional financial institution. On real estate, we can go up to 85% loan to value. So whatever that, if it appraises for $100,000, we could fund 85%. We'd only require a 15% down payment. So those are some lending standards we've really modified to help serve this group. Some loan underwriting guidance. We do have a custom scorecard that we've created, and it evaluates these following areas here. Credit history, as you can imagine, we like to see strong credit reports. If there's no credit history, that's better than bad credit history. So We've pulled credit on several of our customers, and their score has been really poor, and it's mostly because of lack of history, then we can overlook that. But if there are foreclosures or bankruptcies, lots of late pays, that's a different story. So we're really looking for a good credit history, whether that's either no history or a clean credit history. So make sure you're checking your credit. I think you can do that for free at least once a year. We're looking for industry experience, whether that's you grew up on the farm or you've put in the time and the research to show us that you're dedicated and you have some knowledge about the industry that you're part of. Secondary support. This is where I talked earlier about that total assets versus your total liability. That could be a source of secondary support. Maybe you have some equity in some real estate. Maybe you have, I don't know, a herd of cows that you've paid off, that you can pledge as collateral, things like that, that really show that you've got some skin in the game and something to lean back on if things don't work out. If plan A doesn't work, what's your plan B? With this application, we do request a written business plan. It can be as complex as you want it to be. Typically, it's a couple of pages of some key points, and we are happy to help put that together as well. And then collateral. Touched on this a little bit. What are you going to secure this loan with? As I mentioned before, we can fund 100% of the purchase if it's it's like a tractor or a herd of cows, things like that. We could potentially do 100% financing with this Ag Future microloan program. So, pretty neat program, relatively new to our association, and we just want to make sure that everybody is aware of that. The next loan program I wanted to talk about is our Ag Future, our FSA partnership loan. We can get pretty creative when it comes to our financing with FSA. FSA has been a great resource to help us fund loans that typically would not be approved otherwise. I'll read this here on the left. It says the Farm Service Agency has several programs that can be utilized to help manage risk while providing constructive credit that meets the special needs of young and beginning farmers. This loan type would utilize an FSA financing program and include an FSA guarantee on funds advanced by the association. The association meaning Western AgCredit. Number one here, we have the ability to do an FSA guarantee on a loan. This is available for short-term loans and real estate loans up to the FSA guarantee limits. I believe currently it's just over $2 million. This is updated annually. What an FSA guarantee does is it helps us mitigate our collateral risk a little bit. If there's maybe not as great of a down payment or our collateral is a little bit more specialized, we can help mitigate that risk with an FSA guarantee to help us feel a little bit more comfortable about advancing funds against that particular collateral. Number two is loan underwriting guidance. So this is applicable to all of our FSA partnership loans. Character and credit history, we require satisfactory credit history, financial and production management skills, reasonable plans supporting the loan request. We look at the capacity credit factor, but we do permit a little bit lower net margin than a traditional standard. And then the capital credit factor, we do allow for a higher leverage. So it's limited to working capital, common with most YBS borrowers, up to 2-to-1 debt to equity ratio, which is about double. Normally we're about 1-to-1 on that debt to equity ratio, but with this partnership loan, we can go up to 2-to-1. And then the collateral credit factor permits a higher advance rate, which is obviously mitigated by a 90% guarantee. So then we have the FSA joint financing program. So this includes an FSA direct farm ownership loan that is in a junior position to the association's loan. The FSA loan can have a below market fixed interest rate and the loan term up to 40 years. The FSA loan would be the lesser of 50% or 600,000, and then Western AgCredit would fund the rest. So the purposes could be, purchasing real estate, constructing buildings, other improvements on farm real estate, soil or water conservation projects. So FSA terms, they can go up to 40 years. Their rates are typically less than the FSA farm operating rate. And I think it's a minimum of 2.5%. If I'm wrong on that, my FSA friends can correct me when they present later. Western AgCredit, so we would receive the first lien, which would allow us to extend funds, and then FSA would be secured in the second lien position there. And then FSA could potentially provide a guarantee on the Western AgCredit's portion. So pretty neat programs. There is an FSA down payment program. I'm sure they'll talk a little bit more about this in depth in the coming presentations. So I'm not going to touch a whole lot on this. But what this does is it basically allows the borrower to put maybe 5% down, with the 50% and 45% being funded by FSA and Western AgCredit. That way, they can still obtain the loan, still requires a down payment, but they can still qualify for a loan. There's some limitations there, as you can see. I believe the maximum FSA loan amount is $300,150. FSA loan terms are limited to 20 years, but interest rates are really good. So keep that in mind. FSA guarantee, they can be up to 95%. And that's about it on that one. Like I said, FSA is probably going to dive into that with their next presentation. I'll leave them some talking points there. So Ag Future loans. This is just the Western AgCredit, the standard Western AgCredit Ag Future loan. So we can extend credit through this program without the utilization of an FSA guarantee or FSA partnership program. But these loans, they should demonstrate a strong financial and production management skill, evidenced by historical records, reasonable plans supporting the loan request. Typically, we require a 3-year history. Not always the case, but it sure supports a strong loan application. So this program, in order to qualify, you have to be young or beginning. The small doesn't qualify. Sometimes it will. It just kind of depends on that circumstance. But typically, it's just a young or beginning loan. FSA guarantee is optional. We can go up to $2 million on this loan limit. So this is one of our bigger limits through our beginning farmer program. And then all of our chattel and real estate loan programs are available on their full terms, meaning we can go up to 30 years on a real estate loan and up to 10 years on a chattel term loan. So here's some underwriting guidance that we've modified for our Ag Future loans. We do permit a lower net margin than traditional standard. We do allow for higher leverage, again, up to that 2-to-1 debt to equity. And then our collateral credit factor, we definitely have modified our standard there to permit higher advance rates if the debt to equity ratio is within standard. So some flexibility there on our underwriting standards. And then really just the last part I wanted to touch on regarding our YBS program is our Ag Future Rate Smart program. Once you have a loan with Western AgCredit, we want to be able to give you the best rate possible. So to incentivize our YBS farmers to seek continuing education development, we've developed a program to provide temporary interest rate reductions to YBS borrowers who accomplish certain education requirements. We give a 100 basis point reduction on the stated interest rate if you meet 2 of the 3 young, beginning, or small farmer definitions. Uh, just to kind of recap, I don't think I actually mentioned this. So to be a young farmer, you have to be less than 35. A beginning farmer, you have to have less than 10 years of experience. And a small farmer is less than $350,000 of gross farm income. So you have to meet two of those three definitions in order to qualify. The YBS borrower must be personally liable. It is intended for producers with an active role in the daily operations and management of a farming enterprise. Just a little caveat here, the program is not intended for YBS customers who have a passive ownership interest in an agriculture interest and limited involvement in daily management and operations. So for example, if I'm just graduating high school and I've got 4 years in college, my dad wants a better interest rate on his loan, I can't just go and sign up to get my dad a better interest rate, right? I've got to be actively involved. I've got to be really part owner and highly involved in order to qualify for this program. So really, in order to qualify, you have to go on our website, sign up for our Ag Future interest rate program. You have to register, and then once you do that, you can actually watch a video. It's about a 20-minute video with some questions. It's called Borrowing Basics. And once that is completed, you'll get a certificate, and it will tell you qualified for that reduction. So it's pretty neat. It helps our YBS farmers not just get a better interest rate, but learn a little bit about borrowing and managing their operations. So. All right. Oh, I guess I jumped the gun on that because it talks a little bit about the borrowing basics video here later. So this program highlights so we can offer this up to $500,000 on loan volume. If it's a $2 million loan, then it will be prorated to just a 1% reduction on $500,000. And then let's see, it's only applicable for 5 consecutive years. So once that interest rate reduction is awarded, it will be removed 5 years after that. So it's granted for 5 years. It reduces that interest rate by 1% for 5 years. When that period is over, it goes away. It's not available on the microloan program, but it is available on just a standard Ag Future loan. And it's not available on loans originated using our special equipment or vehicle financing because those are different types of rates. But all the other loan rates they are eligible for. And as I discussed before, you enroll on our Ag Future portal, the Rate Smart program, and then watch the Borrowing Basics course, take the quiz, and then complete that prior to the loan being booked, and you will qualify for that 1% interest rate discount. Before I end with questions, I did want to talk a little bit about Western AgCredit's, just our cooperative model. So we are a cooperative. Many of you have probably had experience with IFA or Valleywide. There's a lot of agriculture co-ops out there. Well, we are one of them, and what that means is we are owned and governed by our members. We have a board of directors. Those board of directors help manage our CEO and guide the company in the way that our members want. They each represent a specific district, a territory within our association. So every member is represented by their director. Part of being a part of our cooperative entitles you to some of our profits. We are not necessarily a nonprofit organization, but being a cooperative, if we have excess earnings, we like to give those back to our customers. So, for example, this year we returned 1.5% of interest back to our borrowers. So, for just easy numbers, if your interest rate was 6% on a 30-year real estate loan, after we paid you a patronage check, that deducted that by about 1%. So it ended up being, about a 4.5% interest rate. And so There are benefits to borrowing money from Western AgCredit. We really want to give back to our communities. We want to give back to our members. We want our interest rates to be really as competitive. We want our interest rates to be at the market, and then our patronage to put us above the market. We want to make sure we have the best interest rates out there, the best interest rates available, and ultimately the most sustainable source of financing for agriculture. I think that's about all I have. I don't see any questions on this question board. If anybody wants to, I don't know if I should take it off mute and let people ask questions, but Ruby, I will let you handle that. How's that?
Okay. So you've got Ben's contact information here in the screen. But one question that came up even before we started was, and you kind of alluded to it, but maybe it's good to just kind of reiterate. If somebody is like thinking about, I want to do something, should they start with you? Should they start with FSA? Where do you believe, what's the best approach for that?
Yep, that's a great question. So we love FSA. FSA is a great place to start if you do not qualify for traditional financing. If there's any question at all, I am happy, or any one of our loan officers, we would be happy to sit down and talk about an application, go through the process. If we feel like maybe if you're not going to qualify for conventional financing yet, but you're close, then maybe step one would be FSA. FSA is their goal is really to help get people in, help them get established, and then once they're ready to move on, then they graduate them out of their loan program and on to the next. And so I would recommend starting with with us, because we are so involved with FSA that we know that, well, if you don't qualify here, we can definitely put you in contact with your local FSA department or agency to get things rolling one way or another. So.
And then we have another question that came in. Do young people interested in wanting to start a small farm but do not own land qualify as a younger beginning farmers, even though they don't currently run a farm?
Yes. Yep. That would be the beginning part, right? Or the small, could be small as well. So if your gross farm income is less than $200,000 or $350,000, then that would check that box. If it's beginning, if you've never farmed before on your own, then yes, you would qualify for that as well. So to answer that question, yes, that would definitely.
And then I had another question. I think in one of your requirements, you talked about having a business plan. Can you elaborate a little bit more on what you're looking for in a business plan for one of these loans?
Absolutely. So when we go through a business plan with a customer, we really want to make sure that they've covered all their bases. Have they identified all of the? I mean, you can't always identify all of the risk, but have they thought through the process of, what are the risks of this business move, right? If I borrow this money, have I thought through the process of, well, does my business have the ability to absorb any negative effects? If things go south, we want to see that there's a foundation, foundational principles of the business. The projection looks good. Really, we just want to make sure what you're getting yourself into. And usually those business plans, we work through them together because we like it's obviously very specific to that operation. I mean, if it's a greenhouse versus a cow-calf operation, the business plan is going to be completely different on each of them, right? So there's going to be different risks. But we just want to make sure that as many risks are identified as possible, and how are you going to mitigate those risks?
So another question is, I think it says for agriculture operations, but how do you define ag? So what about something like cut flowers? And then also, what about if they're also making like jams and jellies from their vegetables or salsa or something like that?
Yep, no, that's a great question. So that would apply if you are producing an ag product, so flowers, if you're making your own jams, if you are growing the berries yourself, then yes. If you're a processor, that kind of gets in a little bit of a gray area on what we can and cannot lend on. If you own the throughput, that's basically how we define it. So a cut flower operation, um, it sometimes does not qualify, but oftentimes it does if you're growing your own flowers. Again, those two, the two that you picked are very kind of gray areas, right? Uh,
Okay. And then, oh, I had another one, but I'm blanking out on what else I had, but this is really great information. What is maybe the difference in like kind of preparing to get a loan, going through somebody like Western AgCredit versus a commercial lender?
yeah, but I love that question. Every single one of our loan officers have extensive agriculture experience. Um, Obviously, we're not versed in every topic of agriculture. For example, I had an individual come talk to me about bees yesterday, and I grew up on a dairy farm, right? So that's a little different for me. But even talking through that application process, I felt like we could kind of get on the same ground and really relate. I feel like one of our strengths at Western AgCredit is that ag focus, right? We are 100% agriculture. We don't do anything else but agriculture. We're dedicated to it. We love it, and that's what we do.
And
So
my final question that I have is sometimes for small operations and the beginning ones and stuff, they feel like the loan process may be complicated, going through FSA may be complicated, and so they just put things on credit cards. What are the dangers or the disadvantages of doing that versus going through like Western AgCredit or FSA or something?
yeah, so credit cards can be a great resource if used wisely, depending on how much, right? I mean, if it's a couple $100s and you're managing through it over the course of a couple of months, maybe that's a great resource. If you're looking at, $10,000, $15,000 at 24% interest, that's going to be tough, right? That's not going to add a whole lot of good things. It's not going to add positive expenditures to your business plan, right? So sometimes it's worth the work to go through the tedious application process because I know some people that have had loans with FSA that have been 2, 3, 4%, and yeah, it may have taken a few weeks to go through the application process, but at the end of the day, if it saves you thousands and thousands of dollars, it's
And then another question came up in the Q&A. Would an ornamental or conservation plant nursery business qualify for Western AgCredit loan?
you are growing the plants yourself and you own them, then absolutely.